If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Quant, hello, wake up. Welcome back everyone. It's Lou Crypto here, back with another Quant update. Need to see this waking up, of course. Otherwise, there's chances of us rolling over. We're still above all those key levels. In fact, yesterday, there was actually a nice signal over here. Us holding the 55 as support. It was also an attempt of validating this potential M pattern double top. You need to go ahead and lose this neckline, and I've drawn out the paths in the previous updates on where it would go down to as a technical target. I think it's in between these two levels for this M pattern, but again, you need to lose the neckline with a daily candle close to validate this pattern, and we had the chance to do so yesterday. We were actually underneath that point, and so all we need to see is a close below it, and before the daily candle closed, the bull stepped in and just proved that this is a key level of support with this nice spinning top over here, bullish hammer, spinning top, whatever you want to call it. However, we didn't manage to actually close back above the 20 and the 200, and so right over there we're still getting that EMA repel, which is actually a signal for lower. So what we now need to see, and the reason why I said knock knock wake up, is because we need to reclaim the 20 and the 200 to, of course, keep in this uptrend. The longer we remain below this, there's chances of validating this M pattern because we're now trapped between the two. So we must see, let's see if in 7.5 hours time, can we break above $102 and close above that on the KuCoin chart? And that is because the 200 EMA is sitting there. This is essentially what's suggesting the longer term trend is. You can see the 20 was reclaimed. This means we're bullish. The 55 is reclaimed, which means we're bullish. But as we're topping out here and we're underneath it, we're bearish. So these 20 and the 55 is like a shorter term signal, and then the 200 EMA is your longer term signal. So that's why we really need to get above this. We need the moving averages to actually cross above the 200 EMA, and so at that point the 200 EMA would be below everything, and when that happens, it's a signal that in the short term and long term we should be continuing up. In the short term, we have some short term signals. We have a bullish cross on the daily, so we are looking for upside. Boom, coming back to that support to confirm it, looking for upside. We did actually break with new highs, but before the candle closed we were smacked back down below this resistance, so a failed breakout, and with that creating a potential double top pattern with potential targets down to here. It is also still the golden pocket, so on a technicality it's actually fine to go down there, but when we're reading the moving averages, we want to maintain above them at all costs. So right now, yes, we got the bounce off of here, which is extremely bullish. Why? Because on this separate occasion to the left over here, we lost the 20 during the candle, and also during the same candle we were at the 55, and then we reclaimed it for the close. So that's a bullish signal. That's what we would have liked to have seen yesterday when we bounced off the 55 again, as we saw to the left over here, reclaim the 20. That's really what we need to see. So it's important today, in 7.5 hours time, that we get this close above 102. If we actually close below 102, then we're going to continue to range between these 2 points, and eventually a breakout will happen, whether it's to the downside and we come into the golden pocket, or we break to the upside and we actually are looking for 109 to be broken to finally meet our $130 target. This $130 target is still valid, as we are above this wick over here, ranging from $94 to $100 as a nice huge support we've been holding for the entire year. We did come down to meet this head and shoulders patterns target down here exactly, and then that's where we've also got this reversal back up into the resistance. From here we're meant to continue lower. That is where everything changed, everyone, when we reclaim this level and confirmed it as support. This is a huge bullish indication, and when you went ahead and reclaimed this level just like butter and confirmed its support, we also were given a daily bullish cross. So multiple signals suggesting that eventually, as long as this low holds, we should see continuation higher. I'm going to show you what that percentage gain is from today's current price, 26%, and yeah, that is nice and juicy for us quant holders. What we can now do is scale down to the 4-hour time frame, try and look at this a bit clearer, and what I'm, again, as I said in the beginning of the video, I'm starting to like what I see, but when we scale down to the 4-hour, it actually pretty much confirms what I was saying. We came down to this low. Remember, that was the daily time frame over here, this low where we held the 55 and reclaimed the 20. That's what we would have wanted to see here. hold the 55 but reclaim the 20. It didn't happen, but that's totally fine. Why? Because on this second low over here, it's a higher low. It's also going to be your golden pocket. And as you can see, yes, right there, right there, nicely, that is sitting over there. Okay, you can see it went slightly beneath the golden pocket. I'm going to show you those exact reasons. Can you see this wick to the left? You have to consider that as a support. So we need bodies to close below that in order to continue back down to this low. Did we get any bodies closing below? No, we closed smack bang on it. We had a candle where it was below not only that support, but also the 200 EMA. And then we very swiftly reclaimed it for the candle close. And we were, of course, confirming this as support. And as I mentioned previously, the 200 EMA, if we're in an uptrend, is the bottom of your uptrend. This is proof in the pudding. We came down to here. This was our lowest point. We then pushed and made a new high. Going back to the daily, I can show you in downtrends, it acts as our top, and we eventually continue lower. So when we're back on the 4-hour time frame, this is a signal that it's the bottom of our uptrend. So this is the lowest point it should go if it is bullish. It's also the golden pocket. You're allowed to come to the 786. So it did get down there, but we saw the close above this point on the 200 EMA. So that was your reasoning for why it actually closed below the golden pocket. But as long as you're finding support above the 786, and we were given further reasons, this wick support, as well as the 200 EMA being there, the bottom of our uptrend, this is why we're starting to see this reversal. But we're not in the full clear yet. As you can see, when we bounced off the 200 EMA, we had this pump back into those moving averages, and they had just formed a bearish cross. So if we want to invalidate that right now, if we want this to be like a lagged signal, like a lagged indicator in that it's actually suggesting the bottom rather than a new downtrend is forming, because look, we were already going down before that formed. In fact, it formed right at the bottom. Same over here, it formed right at the bottom at the support when we were down over here holding the 200 EMA. So if we want to go ahead and invalidate any further downside, just as we did last time, we have to reclaim those moving averages. So we need to see that being reclaimed and essentially flipping this area that is resistance currently into support, and then continuing higher. And so what I could then do for you guys, as of now, this is our, actually no, we're going to, yeah, as of now this is our bottom, but I'm going to put the fib somewhere else. So what I'm going to do is actually place my fib from this 109 high, the original resistance, because we did get above it, very quickly became a fake out and closed below and continued back down, retracing to the golden pocket here. So it needed to go to that point pretty much, so it was totally fine. And I was explaining that in the videos because on the daily time frame we saw multiple supports anyway, in the 4 hours just confirming this because there's more reasonings. And so now that we're on the 4 hour, I've placed this new fib. We've met the lower golden pocket down here. I've deleted that now and I've placed this new set of fibs which is giving us this golden pocket. So that is why we need to reclaim that level to create the reversal wave, to validate these targets up here, 113, 16 and 19, and then over here 126 to 133, in line nicely with our $130 target. So all Quant now needs to do is continue to hold this support, break through the golden pocket, break the 1 fib level, and we're on our way to those targets. And yeah, hopefully we can see that over the next coming weeks. Hopefully we don't go ahead and lose the 200 and invalidate this all and start to correct deeper, because yeah, there are already warning signs over there, but I've shown you multiple reasonings today why we should be catching support over here and the last few days as well. And then in order to continue this breakthrough, we now need to push through the moving averages and this golden pocket in the exact same location, flip this all into support to head up to those targets. Thank you guys so much for tuning in. Please like, subscribe, comment, share, as we're 100 subs away from 7k. If you want to get educated, do my course, Discord community for 2 weekly group calls, which we did yesterday and on Tuesday. If you want to take my action on my course or my one-to-one mentorship plan, message me, links down below. Head over to Twitter, message me for the discount promo code, and so you can apply that at checkout. Cheers, everyone. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.